Hello everyone, welcome to my video on why we should invest in stock market. I am Harish. In this video, I would like to attempt to remove some of your fears about investing in stock market. While so many options are there like investing in gold, real estate, fixed deposit and bonds, why should we invest in stock markets? Basically, stock market is an enormous wealth creator. So, stock market also has one unique feature. Probably nobody must have told you until now. That feature is risk mitigation. This feature is not available in any of the asset classes. It sounds very interesting, right? In simple terms, risk mitigation means there is risk in the market, but you can minimize it and cut your losses. To be a successful investor or trader, you should know when and how to cut your losses. You'll be even more surprised if I tell you that one can make profits even while stock markets are falling. Many savvy investors and fund managers do it. To achieve these two things, these two features, you need to be expert. You need to update your skill. And how do you get it? First, you need to start with the basic. You have to have the basic understanding. You need to learn, get experience, get exposure, and once you get to that stage, you can reap the benefits of it. And what are the other benefits of investing in stock market? Let's go through that. I'll tell you a little bit of risk mitigation, and towards the end of the video, I can probably explain it to you a little bit in detail. Let's assume that you invested in real estate. If the real estate prices are falling, how do you control it? Can you control it? The only way is either you have to wait it out till the prices come back up, or sell it at a discount rate and then move on. Same thing with gold. If the gold prices are falling, I'm assuming that you invested in the physical gold, not in exchange tradable gold. If the gold prices are falling, how do you control it? How do you mitigate that risk? Either sell the gold at loss or hold the asset until the prices come back up. So probably let's assume that real estate and gold you did not buy for selling, let's assume, but you can mitigate that risk in stock market. There are two ways. Either you short the general market or you purchase puts. Let me explain what a put is. A put is basically an option. Let's say you bought a share at 100 rupees per share and you think that market will fall, right? So you also buy a put. Let's say the premium to buy a put is 5 rupees. So now your cost is 100 plus you also paid for the put 5 rupees. So total your expenditure out of pocket is 105 rupees. Let's assume your anticipation came correct and the stock price actually fell to maybe let's say 60 or 50 rupees. The put seller has to buy the share from you at 100 rupees because you gave him the premium of 5 rupees, correct? So this way, even though market fell, you are able to sell your share at 100 rupees. Did you understand this? Now let's check out the advantages of investing in stock market. The first advantage is stock market is one of the only two asset classes that can give you two types of incomes. One is the capital appreciation and second is the dividend incomes. The second asset class is a real estate. Same, you can have the capital appreciation and if the property is rentable, you get monthly rents. So no other asset class can give you these two types of incomes. Probably you can compare or you can argue saying that bonds are also same. They'll also give you two types of incomes. One is if the bond prices go up, you get capital appreciation and bonds will pay you the interest income. Yes, you're right. But bonds are also part of the capital market, though it's not share. The share market, we call shares, stocks, everything, and bonds, they belong to a category of capital market. So capital market, within capital markets, both stocks and bonds will give you two types of incomes, and outside of the capital market, real estate is one that can give you two types of incomes, and rest of the all asset classes will give you only one type of income. That's either capital appreciation or regular income. Your fixed deposits give you regular income in the form of interest. Let's say you bought gold, the price go up, you get the capital appreciation. Second advantage is historically stock markets have outperform all types of other investments, be it gold, real estate, or any other thing. If you take the example of Great Depression in US in 1929, since then the markets all over the world have gone up. If you take the example of Great Depression in US from 1929 to 1930, after the Great Depression also we have seen some temporary setbacks in the form of Harshad Mehta scam, Ketan Parekh scam, internet bubble, and then 2008 and 9 crisis. If you look at the indexes valuation today, the valuations are much higher than what they were back in those days when all these scams or crashes happened. So stock market basically has created enormous wealth for many of the investors. You can take the examples of Dr. Reddy's Laboratories or Wipro, Infosys. All these companies has created enormous wealth for its investors. And not only that, if you take the example of Sensex returns, as per the Economic Times report or an article, Sensex has given since 1980 17% of CAGR. The meaning of CAGR is compounded annual growth rate. Sensex has returned 17% compounded annual growth rate since 1980 until 1929. That is phenomenal return. So this report was only until 2019. They did not count this year. And with this pandemic fall, probably you can take off a couple of points from 17. Maybe the rate of return comes down to like 13 or 14. Even then, it's phenomenal return. But once the stock market goes up back again, that 17% will come back up. And the next major advantage, in my opinion, is the taxation. Capital markets, especially in India, has a lot of concessions. The long-term capital gains on stocks is just 10%. If you compare with real estate and gold or any other asset class, the long-term capital gain taxation is 20%. Moreover, you have to hold those assets for 2 years. But in terms of shares, you only have to hold it for 1 year. There's a difference in percentage of tax. In shares, it's only 10%. In the other assets, it's 20%. And one more beautiful thing here is your profits up to 1 lakh in a year are tax exempted. Meaning somebody earns 10 lakhs in all kinds of asset classes, you pay taxes on those 10 lakhs. But in stock market, you would deduct 1 lakh from your 10 lakhs profit, and only on 9 lakhs, the 10% tax is applicable. So that reduces your tax liability a lot. Next benefit is you don't need a lot of capital or a lot of money to invest in stock markets. Unlike in real estate, where you need to put down a lot of money as down payment. You can start small. Probably you can even start with 500 rupees a month or maybe 1,000 rupees a month. If you can afford to start with 5,000 or 10,000 a month, that's even great. But you got to start somewhere. These days you can buy even one share of a company that you like. So this is how flexible the stock market is for you to start investing. And probably all of us know what inflation is. If we keep our money in savings account, the purchasing power of this money diminishes over a period of time. That's because inflation will diminish the value of your money. If you can afford to buy a product for 1,000 rupees today, can you imagine to buy the same product for the same 1,000 rupees after 10 years? Maybe not. And probably you must have heard about the diversification. We have to diversify in our investments to reap the maximum benefits. Without realizing, all of us will invest in multiple asset classes. Example, if you're buying gold ornaments for family members, we don't even realize that we are investing in gold as an asset class. If we buy a home, we are investing in real estate. We don't realize that, particularly thinking that we are investing in here. No, we are buying our needs, but actually that's investment. The only thing we don't feel as a need is investment in stock market. But stock market provides you a beautiful option to diversify, because all these, the real estate or gold or fixed deposits, bonds give you a specified percentage of return. But for you to spice up your rate of return, if you come into stock market and pick the right stocks, probably your rate of return every year probably will increase. There are a few more advantages, like reaching your financial goals without realizing that you're contributing monthly income, because you get habituated towards that, and you make this investments early in age will create a good nest egg in your retirement also. In your retirement, probably when you receive a certain income in form of dividend and capital appreciation from your investments all through your life or all through these years, will make you financially comfortable, and you don't have to depend on anybody else, like your children or grandchildren. These are about the advantages and the advantages of investing in stock market, and I also gave you the two unique features. One is risk mitigation, and the second one is making money even while stock markets are falling, just like a pro. Actually, the smart money is involved in stock market just because of these two reasons, not for anything else. Next video I would like to make on how to pick good stocks. If you like my video, please like it, share it, and subscribe my video, and also turn on the notifications. See you guys.